Hey, what's going on, guys? Craig Kiriakis here, and I know that the real estate sales and purchase process can be stressful at times, and that's mostly because there's so many moving pieces and so much that goes into it. It can definitely feel a little daunting. So I wanted to make this series to help answer some of the questions that I get asked most frequently from both the seller and buyer's perspective. And today we're going to be talking about the earnest money deposit. Now, the earnest money deposit is undeniably one of the most important pieces to the home purchase puzzle. So let's go ahead and dive right into this. So right off the bat, what is the earnest money deposit? Well, the earnest money deposit is essentially a good faith deposit made by the buyer to the seller to show that they're serious about following through with the purchase. We can think of it this way. Think of it as an engagement ring, but instead of a ring, it's just a big chunk of change. Typically, your earnest money deposit is going to be between 1 and 2% of the purchase price. Now, that amount is completely negotiable, and really it depends on multiple factors. Factors such as the price of the home, the local real estate market, and how competitive this particular property is. It's important to note that a larger deposit may show a seller that a buyer is more serious and more willing to follow through with the purchase of the property, whereas a smaller deposit may be more appropriate for a lower priced home or for a buyer that doesn't have as much free cash. So when exactly do you make this deposit? Well, the deposit is typically made a few days or within a few days following the successful execution of the purchase contract. So let's break that down. Basically, once the buyer and seller have both signed the purchase contract, there's typically a few days of a window that the buyer has to deposit the funds. Now, time is of the essence because in most states, that contract is not fully ratified until the earnest money deposit is in escrow. Now, the last thing that you want in this stage of the purchase as a buyer is a seller to be asking a few days after the contract has been signed where your deposit is, because it can very quickly end up being a situation where the seller says, you know what? This buyer's not taking this purchase seriously. I want to go back on the market and I want to sell the house to someone else. Now, you might be asking yourself where the deposit goes, and that would be a good question. Back in the day, it used to be held by the listing agent's brokerage in a trust account. As you can imagine, there's a little bit of a bias there. So nowadays, your deposit is going to be held in trust with a title company or an attorney, which acts like Switzerland, a completely neutral third party that facilitates the transaction for both parties. Now, another thing worth noting is that at the time of closing, the entire amount of the earnest money is typically applied to the purchase price of the home. Now, you might be wondering what happens if the sale doesn't close or the deal falls through. Well, if the sale falls through due to a contingency, such as the buyer's home not selling as expected, or inspection contingency, or another legitimate concern, well, the buyer most likely has the right to get all of the earnest money back from the title company or the escrow attorney. However, if the buyer just has a change of heart or suddenly gets buyer's remorse or just decides to back out for any reason, the seller probably has a pretty good claim to that earnest money deposit, and rightfully so. The real estate transaction is kind of a big deal, and every home that goes up for sale kind of has a permanent record. So when you see a home going on market, off market, on market, off market, it develops a stigma, and that decreases the overall value. So the seller should have some consideration if the home has been tied up off market for any amount of time. And it's pretty important to review the sales and purchase contract so that you understand all the ins and outs and what would happen to the earnest money if the deal falls through for any reason. Also, another good reason to have an agent that's going to take the time to explain this to you and help you understand what earnest money is, where it goes, and what happens if for some reason the sale does not close. So just to wrap this all up and put a bow on it, earnest money deposit is essentially a good faith deposit made by the buyer to the escrow or title company to be held in trust as a good faith deposit to the seller. basically shows to the seller that the buyer is serious and they're willing to stake usually a good chunk of change on this purchase. So I hope that gives you a good understanding of earnest money deposit and helps you understand a little bit more about the purchase and sales process. If you have specific questions, I would love to hear from you. I want to answer your questions and continue creating this series to help streamline and simplify both the purchase and sales process for home buyers and sellers. And guys, that's all I've got for today. If you found this video helpful, if you thought it was good information, I would absolutely love if you could hit the subscribe button, be sure to click the like button, and share this video with a friend or family member if you happen to know someone getting ready to make a move or who needs to sell their home. And until next time, see ya.